10,000 guilders. That's what someone paid for a single tulip bulb in Amsterdam, January 1637. Not a garden, not a shipment, one bulb, roughly the price of a grand house on the city's most fashionable canal. 6 weeks later, that same bulb couldn't fetch the price of an onion. This is Object Origins, where I trace how ordinary things shaped extraordinary history. Quick note before we go further, I'm not a financial advisor, and none of this is investment guidance. This is a history story. But it's one that might explain something uncomfortable about how markets and people actually work. Because the tulip bubble of 1637 wasn't just the first financial bubble. It might be the most honest mirror we have for every crash that came after. The tulip didn't start as a financial instrument. It started as a traveler. Sometime in the 1550s, tulip bulbs made their way from the Ottoman Empire into Western Europe. The Ottomans had been cultivating them for centuries. They were woven into textiles, painted on tiles, grown in the Sultan's private gardens. When European botanists first encountered them, they were fascinated. The flowers were unlike anything growing in the Low Countries. Bold geometric petals, vivid saturated color, a kind of structured beauty that felt almost engineered. By the 1590s, tulips had taken root in the Netherlands, literally. Dutch soil and climate turned out to be ideal. Wealthy merchants began planting them in private gardens as a quiet display of taste and worldliness. Owning rare tulips meant you had connections, education, reach. But here's where it gets strange. Some tulip petals developed these striking, flame-like streaks of color, white-feathered with deep crimson, purple-veined through pale yellow. Nobody knew why certain bulbs produced these patterns and others didn't. It seemed random, almost magical. Growers couldn't reliably reproduce them. What nobody understood at the time, and wouldn't for another 300 years, was that those mesmerizing color breaks were caused by a mosaic virus, transmitted by aphids. The flowers that drove the highest prices were, in a very real biological sense, sick. The most beautiful tulips in the Dutch Golden Age were dying. And that's what made them expensive. The most sought-after variety was the Semper Augustus, white petals streaked with blood-red veins. Descriptions from the period read almost like love letters, and the prices matched. By the early 1630s, Tulip Mania explained in its simplest form looked like this. Demand for rare bulbs kept climbing. Supply stayed limited because infected bulbs reproduced slowly, and a speculative market filled the gap. People weren't just buying flowers anymore. They were buying the idea that someone else would pay more tomorrow. And then the market invented something genuinely new. Because tulip bulbs spend most of the year underground, you plant in autumn, they bloom in spring, traders started buying and selling bulbs that were still in the soil, contracts for future delivery, pieces of paper representing flowers that didn't exist yet. This was, in effect, one of the earliest futures markets in recorded history. People were trading the promise of a tulip. The speculation pulled in everyone, not just merchants and aristocrats, weavers, bakers, farmers. Tavern backrooms in Harlem became informal trading floors. A single Semper Augustus bulb reportedly changed hands for around 10,000 guilders. To put that in proportion, a skilled craftsman in Amsterdam earned roughly 300 guilders a year. One bulb equaled more than 30 years of labor, or one very nice house on the Herengracht. The entire economy of desire was balanced on something nobody could see, growing silently underground. February 1637, a routine tulip auction in Harlem. Sellers laid out their bulbs. Buyers looked. And then, nothing.
Not a single bid. Not one sale. It's difficult to say exactly what triggered it. Maybe buyers simply ran out of greater fools. Maybe someone did the math and realized a flower shouldn't cost more than a house. Whatever the cause, the effect was immediate. Within days, tulip prices across the Netherlands began collapsing. Within weeks, they'd fallen roughly 90%. Contracts that had been worth small fortunes became worthless paper. The fallout was real. Lawsuits clogged the courts. Growers who'd taken on debt to expand were ruined. The Dutch government eventually had to step in, allowing buyers to walk away from contracts by paying a small penalty, essentially admitting the market had been a kind of collective hallucination. But here's something worth sitting with. Historian Anne Goldgar, who spent years digging through Dutch archives from the period, argues that the scale of tulip mania has been significantly exaggerated over the centuries. The number of people who actually went bankrupt was relatively small. The economy didn't collapse. The popular image of an entire nation ruined by flower speculation, that's partly a myth that grew larger than the event itself. The story of the mania became its own kind of bubble. That doesn't mean nothing happened. It did. Real people lost real money. But the version we tell, the cautionary fable of an entire society going mad, that's been inflated too, which is its own kind of lesson about how narratives work. The tulip bubble of 1637 was nearly 400 years ago. We tell it as a warning. And then the South Sea bubble happened in 1720, railway mania in the 1840s, the dot-com crash in 2000, the crypto surge and collapse of 2021. Each time, the object changes. The pattern doesn't. That bulb that cost 10,000 guilders, it was never really about the flower. It was about what happens when enough people agree that something is valuable because other people say it's valuable. That loop doesn't need tulips.
It just needs us. Worth saying, nothing here is financial advice, just a story about a flower, a virus, and 4 centuries of not quite learning. If this one landed with you, a like genuinely helps it reach more people. And if you're not subscribed to Object Origins yet, there's more here worth your time.